Chunky Chicken is a good question, testing not only the statement of changes in equity, but it also has quite a chink in the dividend calculation, which is quite important. You should take note of that. As well as there's a very good rights issue calculation that you have to do in this question. It's not a long question, so it's worth your while working through the question. Chunky Chicken has been in business for the past 15 years. The company is involved in the farming and distribution of frozen and fresh chickens to large retailers in Gauteng and Northwest. You are assisting the financial accountant with the finalization of the financial statements for the year ended 31 August 2019. The almost completed equity and liability section of the Statement of Financial Position as at 31 August 2019 was provided to you for final scrutiny. Good. Statement of Financial Position, date 2019-2018. They give you equity, share capital, compulsory convertible pref shares, revaluation surplus, and retained earnings. Guys, immediately they want you to do in the A part the statement of changes in equity for the year ended 31 August 2019. And then they want you to calculate the total amount paid to SARS in the 2019 financial year in respect of dividend withholding tax. So obviously what we have to complete first is our statement of changes in equity. Now you have all your headings for your statement of changes in equity because you already have all the equity items included in the statement of financial position. So go ahead, before we start with completing the question, and write down the framework of your statement of changes in equity. You have a heading for ordinary share capital, compulsory convertible pref share capital, revaluation surplus, and retained earnings. And now, before you even can carry on, you can start writing in opening and sometimes also closing balances. So in your ordinary share capital account, there was 400,000 shares at 8 million rand each. So Chunky Chicken, statement of changes in equity, ordinary share capital, opening balance as at 1 September 2018, 400,000 shares equals 8 million rand. Our 10% compulsory convertible pref shares has an opening balance of 2.1 million, and now they give me a closing balance as well of 1.5 million. So I'll insert the opening balance. I'm going to leave out quite a number of lines, and then I'm going to say closing balance as at 31 August 2019, and I can insert my closing balance of 1.5 million rand. We have a revaluation surplus, opening balance 300,000, closing balance 450,000. So revaluation surplus 300,000 opening, 450 closing. What can happen with this surplus account? Well, if it increased from 300 to 450, what was our revaluation surplus for the year? 150,000. Where do we account for it? In the statement of profit or loss and other comprehensive income, in the other comprehensive section of that statement. So that forms part eventually of total comprehensive income, 150,000 rand. So you can complete that. Nothing more is going to happen to that account. Retained earnings. I have an opening balance of 2.8 million and a closing balance of 2,840. Now guys, as soon as you have in any question an opening balance and a closing balance on retained earnings, then you can bet your bottom dollar that somewhere along the line there's going to be a balancing figure that you have to work out, which they didn't give you per se in rand terms. So therefore you should know exactly what do I account against retained earnings. Now let's quickly see. What do we account against retained earnings? Number one, share issue costs, underwriter's commission, premium on the redemption of pref shares, premium on the buyback of any other equity share capital, our net profit after tax for the year, and then dividends. So those 6 items are the items that we account for against retained earnings. So keep it in the back of your mind, because I can bet you one of those you have to use as a balancing figure. Then long-term liabilities, 12% compulsory, redeemable pref shares, opening balance 2.5 million, closing balance 1250. Now remember, if you have put it in your statement of changes in equity, minus 5 marks, but on the sideline, you can have a little T account. And there you can have opening balance 2.5 million, closing balance 1250,000. Then we had trade and other payables, source income tax payable. We had shareholders for dividends, 0 at year end. We had dividend withholding tax, 0 at year end. Total equity and liabilities. Now let's start. Additional information. Redeemable preference shares were redeemed at 30 June 2019 at a premium of 15% of the originally issued amount. Now, there's nothing else that happened with redeemable pref shares in this question. So therefore, that reduction in the balance of our redeemable pref share account, that one from 2.5 to 1250, can only be these shares that we have redeemed during the year. That's the balancing figure, which is also 1250. So we have redeemed 50% of our share capital in the current year. But the 1250 only represents the capital amount of the shares which we have redeemed. We did not redeem it at the investment price. We gave the shareholder a little sweetener and we paid him a 15% premium on the sale or on the redemption of these shares. So what do we do with the premium? How much did we pay him? What was the total amount that we paid? The total amount was 1,250,000 plus 187,500. So we paid him. I want to write it here because when we're going to do cash flow year after, that is an important amount for cash flow purposes. So this amount went out of our bank account. Okay. What do we do with this premium? So we're going to debit capital account 1250. We're going to credit bank 1,437,500. So what else are we going to debit? We're going to debit our retained earnings with 187,500. 100,000 ordinary shares were issued on 1 March 2019 at a price of 25 Rand per share. Share issue costs amounted to 30,000 Rand and distributable reserves were utilized to account for the cost. So firstly, we issued that 100,000 shares at 25 Rand per share. So in our statement of changes, the equity 100,000 times 25, ordinary share capital 2.5 million. And then the share issue costs that tell us we have to account for against retained earnings. So there's the 30,000 share issue costs. On 1 July 2019, some of the convertible preference shares were converted into ordinary shares at a price of 30 Rand per ordinary share. Now, when we go to our statement of changes in equity, we have an opening balance and we have a closing balance. Before you jump to any conclusions that the difference between the opening and the closing must be equal to the convertible pref shares which was converted during the year, you have to run through all your transactions first to see whether there wasn't something else that had an impact on my convertible pref share capital account. There was nothing in this question, but I might as well had new issue of shares here later in the year, let's say the 1st of whatever, December. And then you had to account for that issue of the shares first before you could have calculated the balancing figure. So now the balancing figure equals 600,000. It is a conversion of preference share capital into ordinary share capital. So what do I do when I do that? I just move out of the one type of capital account the same amount of capital into another type of capital account. The only difference is the number of shares that's going to be issued in return for this value of 600,000 Rand. So I take out the 600,000 here, I transfer the same 600,000 to my ordinary share capital account. They tell us that we have issued 30 Rand ordinary shares to the pref shareholders to make good for their loss of their preference shares. The value of those shares, 600,000. The value per share that we've issued was 30 Rand, so that means that we have issued 20,000 ordinary shares in order to make good for the 600,000 preference shares lost. Then the company had a rights issue on 15 July, whereby the existing ordinary shareholders, only on the ordinary shareholders, received the right to take up 20 ordinary shares for every 1,000 shares held at a price of 28 Rand per share. So a rights issue is I'm going to issue shares to, in this case, our ordinary shareholders. They have to pay for those shares. It's not that they don't get it mahala, they have to pay for those shares. But they're going to get a special price for the share. That, out of the accounting perspective, I don't care whether it's a special price or not a special price. I want the price, the actual price, which is 28 Rand a share. So the first thing that we have to calculate is how many shares that we issued. The full rights issue were utilized by the shareholders and the process was completed by 15 August 2019. So that is the date of the allotment of the shares. Great. So the first thing is we have to find out how many shares were in issue just before the rights issue took place. We had 400,000 shares. We issued another 100,000. We issued 20,000 shares with a share conversion. So we had in total 520,000 shares. For every 1,000 shares held, so divided by 1,000, they received 20 ordinary shares. So multiplied by 20, and that gives us then 10,400 shares. What was the share price? 28 Rand per share. So that 10,400 multiplied by 28 Rand gives us in that total there of 291,200 Rand. 75% of the ordinary shares, 90% of the convertible preference shares, and 80% of the redeemable pref shares of the company are held by South African resident companies. Guys, now that is important information for dividend tax purposes, but please take note that there is no dividend tax on redeemable pref shares, cumulative pref shares. Why? Because the receiver of revenue allows us to deduct that dividend as interest, and out of the receiver's point of view, that is also loan capital. So there is no dividend withholding tax on that interest payable on redeemable shares. However, obviously there is dividend withholding tax on ordinary shares and on all other equity capital, in this case then the convertible pref shares. We know that South African resident companies are not subject to dividend withholding tax. The remainder of the shares are held by natural persons. So when we're going to do the B part of the question, we're going to work with that number 5. All shares issued are non-par value shares. Why is that important? Well, if it was par value shares, you would have had a share premium somewhere. If it was par value shares and you had to calculate a dividend, then you know that you only calculate dividends for preference share purposes on the nominal value of the preference shares, not on the issue value. It's only when it's no par value shares where the dividend of preference shares will be calculated on the issue price. Good. 7. The total comprehensive income according to the statement of final statement, also final, important words, statement of profit or loss and other comprehensive income for the 2019 financial year amounted to 840,000 Rand. What is total comprehensive income, guys? It has 2 components. The one is our net profit after tax, and the other component is our other comprehensive income, i.e. our revaluation surplus for the year. So in total, those 2 was 840,000 Rand. We know that our other comprehensive income was 150,000. We already worked it out. So therefore, the difference between the 840,000 less the 150,000 must give us our profit after tax of 690,000 rand. So very important, 690,000 rand. No interim dividends were declared during the financial year. A final ordinary dividend was declared on 20 August 2019. So in the current financial year, so we have to account for that dividend declaration in the current financial statements. The fact that an ordinary dividend has already been declared also means that the preference dividend had to be declared. The dividend on the redeemable pref shares was treated as interest in the year, and they already gave us the final statement of profit or loss. So I'm not going to account for that interest against this account again, because this was the final figure. So you can accept that that interest on the redeemable pref shares has already been taken into account. So number 8 is real actual dividends. So it will be the ordinary dividend and the dividend on the convertible preference shares that we have to work out now. So let's first find out what the dividend was before we're going to see how we're going to settle that dividend. Now they don't give you the dividend. You see that. They only tell you a final ordinary dividend was declared. And nowhere do they tell you what the dividend amounted to. Now what my pref dividend is concerned, I know it's 10% convertible pref shares, and I can work out how much the pref dividend was. So my pref dividend is going to be 10% multiplied by 2.1 million from 1 September up to 1 July. So that's 10 months. 10 months of the year on 2.1 million times 10%, and on 2 months of the year on 1.5 million times 10% times 2 months. So here's our dividend, 2.1 million, 175,000, on the 1.5 million, 25,000. So total preference dividend, 200,000 rand. Going back to our statement of changes in equity. We have now accounted for everything but the dividends. In our retained earnings, we had profit after tax, we had share issue cost, we had a premium on the redemption. So what's left? Dividends. So now, if I'm going to cost down my retained earnings column, you will see that I do not add up, or it doesn't add up to 2,840,000. So therefore, there's a balancing figure. And that balancing figure, ladies and gentlemen, is our total dividends for the year. So that's what I've told you right in the beginning. If I have an opening balance of retained earnings and I have a closing balance of retained earnings, you can bet your bottom dollar that either one of these figures, it can be any one of them, was not given, and you have to work it out as a balancing figure. Now in this question, the dividend figure was not given, so that is the balancing figure. So the total dividends was 432,500. There we have it. The pref dividend we can work out, so therefore the difference between the total dividend and the pref dividend must bring us back to the ordinary dividend of 232,500. Great. Now we can carry on with the rest of the question. We have already accounted for the full dividend here, which is 432,500. You are allowed to split it between ordinary dividends and preference dividends. You are also allowed to split it between interim dividends and final dividends, but broken down for ordinary and pref dividends. But in this case, there was no interim dividends, so the total dividend at the end of the year, 432,500. Great. The second part of the question, before we get to the second part of the question, let's just complete number 8. The board of directors decided that 50% of the declared ordinary dividends would be settled by ways of a capitalization issue. At 31 August 2019, the declared dividends were paid, therefore there's no shareholders for dividends, and the capitalization issue was completed. Now, if there was a capitalization issue completed by the 31st of August, it means it affected my share capital account, my ordinary share capital account, because there was an issue of ordinary shares in settlement of a dividend that should have been paid. Now, that means I have to update my statement of changes in equity with a capitalization issue. Also, I have the total dividend now. The B part of the question says, calculate the total amount paid to SARS in the 2019 financial year in respect of dividend withholding tax. Paid. Great. So let's go and find out first what is this story about the capitalization issue. It is only on the ordinary dividends that we're going to see. There it is. Ordinary dividends is going to be settled by ways of a capitalization issue. We have the total ordinary dividend, 232,500. 50% of that is going to be settled by a capitalization issue, which equals 116,250. So here in our statement of changes in equity, right at year end, we will have a capitalization issue, 116,250, and then we can complete our statement of changes in equity. Now, number 5, I think. 75% of the ordinary shares are held by South African resident companies. So those guys are not subject to dividend withholding tax. So let's go and have a look how much of our dividend, ordinary dividend, is going to be paid to the shareholders and how much is going to be paid to the receiver of revenue for dividend withholding tax. Now, dividend withholding tax is only payable on the cash portion of a dividend. So on the other 50%, which is going to be settled in cash, that is what I should use in order to work out dividend withholding tax. Now, 75% of that, guys, is South African resident companies, and they are not subject to dividend withholding tax. So we can park them on the one side. It is only the 25% natural persons that is going to be subject to dividend withholding tax, and that equals 25% of 116,250, 29,063. Now there, 80% of the 29,063 will go to the shareholders, and 20% of that amount will go to SARS for dividend withholding tax. So if we're going to work out total dividend withholding tax, it is going to be on the ordinary shareholders, that 5813. That 5813 that we have there. Good. Then on the pref shares, there was a total of 200,000 Rand worth of dividend. They tell us that 90% of the convertible pref shares are held by South African resident companies. So therefore it means that only 10% of the dividend will be subject to dividend withholding tax. So 200,000 times 10% times 20%, that will then be the dividend withholding tax on the preference shares. The question does not require from you to calculate the total amount of dividend withholding tax based on the dividends declared at the end of the year. Question wants from you, calculate the total amount paid to SARS in the 2019 financial year in respect of dividend withholding tax. Now I had an opening balance there of 15,750. I've got zero there at year end. So what does that mean? It means that I've settled that bill as well. So don't forget about that one. I've settled the opening balance and I've settled the 5 because there's no balance left at year end. So I must have settled the 5813 payable on the ordinary shares, and I must have settled the 4,000 payable on the pref shares. So I've paid in total then to the receiver of revenue 25,563.